Hi, Steve Richardson here, coming to you from Woodbury, Gloucester County, New Jersey. Get a little more light in here. And this is the first of what hopefully will be many more live forums called Lunch with a Lawyer. We had a little bit of technical difficulty with the scheduled stream through YouTube and YouTube Studios. So the link and event that was created it wasn't working, wasn't allowing us to go live. So I created this separate live event so people can join in. I'm not sure what happened. I'll have to look into it before the next episode. But in the meantime, we're going to stream live and talk about our topic, which is President Biden's proposed changes and possible solutions to the student loan crisis that we have in this country. Now, there's some interesting information. According to the site Vox.com, 45 million Americans now owe a total of about $1.6 trillion in student loans, and one in 10 loans are in delinquency or in default. So 10% of them are in trouble. Now, the good news is, I guess, that 90% of them are in repayment, but the people repaying them can be really struggling with those payments and sort of sacrificing their short-term goals to pay them. The Federal Reserve estimates that typical monthly payments to be between $200 and $299 a month, which is interesting to see, if that's truly the monthly amount. That's fairly inexpensive car payment, and how much that necessarily impacts finances, don't know, but an interesting fact. Research suggests that people are delaying buying homes, having kids, and changing jobs in part because of the student loan debt. And that may well be true depending upon their financial situation, which means that it could become a drag on the overall economy. So what President Biden's trying to do here, in part, is to stimulate the economy with these measures. The burden is especially heavy on Black borrowers who generally carry more debt and struggle more to pay it off. Now, according to the site New York Fed, outstanding student loan debt stood at $1.55 trillion in the third quarter, a $9 billion increase from the second quarter. In addition, about 6.5% of aggregate student debt was 90 plus days delinquent or in default in the third quarter of 2020. The lower level of student debt delinquency reflects a Department of Education decision to report current status on loans eligible for CARES Act forbearances. So that may explain that 10% figure I mentioned earlier. So President Biden has proposed 6 types of student loan forgiveness, 6 different points that he's talking about. The first is to forgive up to $10,000 in loans per borrower. Now, according to NerdWallet, another personal finance site, more than a third of federal borrowers could see their balances fall to zero with a $10,000 debt cancellation. Among those, 7.9 million owe less than $5,000 in student loans, and 7.4 million owe between $5,000 to $10,000, according to federal data. Now, amazingly enough, these are also the borrowers that are most likely to default on their loans. Over half of those who defaulted, 52%, have less than $10,000 of federal undergraduate debt, according to an analysis of federal data by the Institute for College Access and Success. The typical student leaves school with around $29,000 in debt. Higher income households as a whole are the ones that hold the most debt. More than 8 million people owe the government between $40,000 and $100,000 in student loans. And an additional 3.2 million borrowers owe more than $100,000 on their federal loans, according to this data. So you have the higher income households who really have incurred even more debt. So we're not necessarily looking at lower income households with higher student loan debt. it seems to track to some extent with maybe higher income because they've gone on to get graduate degrees, professional degrees, like a medical degree or a legal law degree. But that comes in. So the $10,000 in forgiveness is a start for the lower and can help the lower balances. And even if you have an average, I believe it's around $29,000 in student debt is what people graduate with, getting rid of, as much as a third of it can certainly be helpful. Now, the next one is to forgive tuition-related student loan debt for students who graduate from public colleges, historical Black colleges and universities, or minority-serving institutions, and who earn less than $125,000 per year. Now, on that, I guess the question is, why only public colleges? Don't people that went to private colleges struggle with student loan debt as well? Why is that being carved out as an exception? If it's really going to be effective, shouldn't it be across the board? And if you have student loan debt from a private institution as opposed to a public school, shouldn't this help you as well? And will it really help you? And also, why these historically Black colleges and universities and MSIs? What assistance is being delimited? Why is assistance being delimited on racial lines? Shouldn't it be socioeconomic and based on ability to pay, income, cost of living, things like that, to really get to the root of the problem? But certainly, if you're making less than $125,000 a year, you're not necessarily, as a household, you're not necessarily that open income, higher end income. Now, the next thing that President Biden proposed to do is to reform public service loan forgiveness. Now, I'm not sure what he means by this in reforming it. Public service loan forgiveness has existed for many years. If you make 120 monthly payments on a direct student loan, paying on an income-driven repayment plan or some other qualifying plan, and work full-time for either a public employer or a 501c3 charity or qualifying nonprofit, you make those while working full-time, which is at least 30 hours a week, or you could have several part-time jobs in the public sector or the charitable sector that add up to at least 30 hours a week. You make those 120 payments and then continue to do so after applying for and then receiving forgiveness of any balance of the debt. And what's great about it is it is wiped out, or any balance that you owe is discharged or forgiven without debt forgiveness income tax from the IRS. It's not taxable, which is another good benefit. So really, anybody who is in public employment or working for a charitable nonprofit full-time should really look into that. And it's good that President Biden is throwing his support behind that, because I think that is a road to affordability on payments of student loans for a lot of people. So that's good. He's proposing some income-driven repayment plans. Now, right now, it's called IDR, or income-driven repayment. There's a sort of alphabet soup of different payment plans. There's income-based repayment. There's pay-as-you-earn, or what's called revised pay-as-you-earn, where it looks at your regular monthly payment. What's your regular loan payment amortized out over whatever the term of the loan is, and based on that interest rate, and then compares that to a percentage of your disposable income. Now, income-based repayment is at 15%, while pay-as-you-earn is at 10%. But what President Biden is proposing is dropping it down to 5%. So he's saying that the monthly payments are at 5% of discretionary income, which is defined as the amount by which adjusted gross income exceeds $25,000. Now, adjusted gross income is a tax term on your tax return. To a great extent, for a lot of people, your adjusted gross income is your gross income. But you your disposable income is going to be, according to this definition, the amount by which your salary or your income for that year exceeds $25,000. Borrowers will not have to make any payments on their federal student loans, and interest will not accrue if their income is below $25,000. So on income-driven repayment, it is possible, depending upon your loan balances and your income, to have a zero payment. Now, every 12 months, you have to report to the Department of Education what your income is. That's usually done by giving them permission to pull your tax return and looking at the adjusted gross income. And also recertifying your family size, because the payment is based on your total loan amount, the interest rate, your income amount as compared to your family size. So you need to recertify it every 12 months under an income-driven plan as to what your annual gross income or adjusted gross income was the previous year, along with your family size. And then they'll give you whatever your payment is. So it is possible to be at zero. And what is also good is that it would be at zero. I believe it is at 0% interest. But also they're saying the remaining debt will be forgiven after 20 years of payments. That's key. And that is, in addition to dropping the percentage from anywhere from 15 to 10 down to 5, under those plans, when you get to the end after 20, 25 years and it's forgiven, unlike public service loan forgiveness, which is forgiven tax-free, you would end up with a tax bill down the road. So his proposing that forgiven debt under an income-driven repayment plan would be tax-free is key, because you don't want to end up at the end of the loan, at the end of the road of paying off your student loans and end up with a big tax bill. So that's good. So that's good for his payment. And the next thing he wants to do is restore bankruptcy discharge of student loans. Well, this is, I think, a long-term coming. In 2005, private student loans were given that protection, and it's caused a lot of problems for people. And it's important to understand the context of all of this when it comes to bankruptcy, and why there's so much protection now. Originally, of course, it was just federal student loans or guaranteed student loans backed by the government, by the state or federal government, where if you had the loan for more than 5 years, if it came due more than 5 years ago, you could file bankruptcy and discharge the debt. That was it. Even a federal backed loan, state backed loan. Then that 5 years became 7 years. And then those 7 years went away, and it was no matter what, no matter how long you've had the loan, it's not dischargeable in bankruptcy, absent this undue hardship test, often referred to as the Brunner test. So it's you need to jump through all these hoops. And if you think about it, the Brunner test was created in the 1980s, back when we had this 5-year period of time. So if you look at the test in that context, it makes sense. You have to show that you really can't, no matter what happens, you can't maintain a basic standard of living if you're forced to repay the student loans. Okay, you're worse than broke. Right? The case law talks about a certainty of hopelessness. And the second test is, well, it has to be a persistent state of affairs. So what that does is it prevents people from graduating from college. They don't have a job. They couldn't maintain any student standard of living if they had to repay the loan. I want to discharge it. Well, no. You might get a job in another 6 months, a year, and everything's fine. What happens during that 5-year period? Is what you're experiencing now going to be your future? Or is it you're just out trying to find a job or having difficulty finding a job? All right. And the third test, of course, is a good faith attempt to repay. Again, during this 5-year or 7-year period, is this a persistent state of affairs? And is this, and have you made an effort to repay the loan? So that's the hoops they really make you jump through, or made you jump through during that 5-year or 7-year period. But because after that, you can discharge it. So I think people should be able to discharge student loans at some point. And nobody wants to file bankruptcy. And if you really can't afford it, and you really have to file bankruptcy, you should really have that relief. And adding private student loans in 2005 was just piling on. It just made the situation far worse. So I think President Biden's on the right track. There have been some legislation introduced, co-sponsored, I believe, by I can't remember her name, but senator out of Massachusetts, and she is proposing this. So it's already in the works. It's already being discussed to try and get this kind of relief. And I think bankruptcy relief would be a big help to people. Naturally, you don't want to file bankruptcy if you have to, but at least you really do get a fresh start. And he also wants to restore defense to repayment. There may be certain defenses to repayment. And again, I'm not sure where he's going with this, where you may have been defrauded by the school as to your qualifications. For example, they accepted you into the program and you're required to be a high school graduate or have a GED, and you don't, but they accept you in anyway. Well, you're not qualified for it. You're not going to get the benefit of that education. So some fraud, there are certain defenses to repayment that you can have. So they say, hey, I shouldn't have to repay it. I shouldn't have to file bankruptcy to get rid of it. I shouldn't have to go through years and years of an income-driven repayment plan. I should just be able to wipe it out. Now, some thoughts on this. On the income-driven repayment plan, going back to that, as I said, it'd be 5% of discretionary income. So it's capped at that. So if your regular monthly payment exceeds 5% of your disposable income, your payment becomes 5% of your disposable income. And you have the opportunity to opt out of the program if you can afford to make the regular payment, pay it off sooner. So if you survive, you're in a situation where you don't have the money and you can get a low payment, things turn around and say, hey, I can afford the regular payment and I can pay it back and be done in less than 20 years. Well, then great, so much the better. Now, individuals with the income below that threshold also have the interest rate on their student loan set to 0. Now, this is another good thing, because when you're in an income-driven repayment plan right now, interest continues to accrue. All right. It's still there. It's still accruing. So if you've got a payment of 0, or you've got a payment of $5 or $10, or you have a payment that isn't even paying the interest that accrues, let alone the principal, then that is going to continue to grow and grow and grow. Okay. And the danger of that is if you should somehow fall out of the income-driven plan, you don't requalify at the end of the 12 months, and you're out of the program. Well, all that accrued interest and everything else then gets capitalized into the loan, and you have an even larger balance. But the idea being, as long as you were in income-driven repayment, that interest would accrue but not capitalize. Well, here at a 0% interest rate, which below the threshold of $25,000 is not going to accrue. So if you're making 0 payments, there's 0 interest. So that's another good thing. Now, part of the problem, it becomes an issue of whether the government should or shouldn't enact these provisions. They can help a lot of people. If you really are struggling so badly with not only student loan debt, but credit card debt or medical bills or everything else, and you truly need a fresh start, then there should be a path to that through bankruptcy. So that helps the people that are considering bankruptcy. But I'm sure a lot of you are out there who are not looking to file bankruptcy. Your financial situation otherwise wouldn't warrant it, and just to get rid of the student loans. So what is there available to you that would help? Well, if you have a small amount, if you have less than $10,000, which really, comparatively speaking, is not a lot of money. Excuse me. Let me just turn this to do not disturb. If you have less than $10,000 in loans, you're not, I've talked to people of 30, 40, 50, sometimes 100 up to $200,000 in loans. Those are the people who are really struggling. So it helps out a little bit on the low end, but it's not as much of a struggle because of the amount of money involved. Forgive tuition-related student loans for debt for students who graduated from public colleges. Well, again, if you went to a public college, if you went to a private school, a private college or university for undergraduate or your graduate degree, then that doesn't help you either. So if you owe more than $10,000 and significantly more than $10,000, and you went to a private college or university, well, so far this really isn't helping you. At best, it may knock off $10,000 of your balance, but beyond that, public service loan forgiveness, if you have a public job and it's already available to you. President Trump was there was talk that he might look to eliminate that program, but President Biden is certainly behind it, which is good. So that continues to be available. But if you're not working for a public employer or a charity or nonprofit, then that's not going to help you. The new income-driven repayment plans, I think that is probably the solution that for people that don't want to file bankruptcy to solve their student loan problem is the biggest one on the plate here that he's talking about of all of the provisions. So that it tracks with your income and is a lower percentage, goes from 15 to 5 or from 10 to 5. And that is probably the best thing, and you should look into that and make sure that your loans qualify. Under current income-driven repayment plans, you have, for not all of them are available to you depending on the type of loan you have. If you have a federal family education loan or a FFEL loan, which is one that was taken out prior to July 1st of 2010, then you may not qualify for some of these other income-driven plans. Income-based repayment, yes, but not income-driven, not pay-as-you-earn or some of these others. So that's a problem. And public service loan forgiveness, you have to have a direct loan. So if you have one of these FFEL loans, you may not benefit from all of the income-driven plans. And it's not clear from what I've read as to whether President Biden is opening the door on his income-driven plans to all loans, whether FFEL or direct, but you need to find out. And there are a lot of people in 2017 who thought they were in public service loan forgiveness, only to find out that they had FFEL loans which didn't qualify, or they weren't in the right repayment plan. So you need to make sure you're there. So I would say that of all of these, of the 6 that we're talking about here, the most effective one for most people is going to be this income-driven repayment plan that he talks about. Now, there are a lot of people that that have spoken out against this, or there are reasons why we may not want to. Now, what about people who are without student loans? If this is to stimulate the economy, a lot of people that don't have student loans, that don't have that burden, financial burden. But opponents of wide-scale student loan forgiveness say that there's many reasons not to cancel student loans. For example, any proposed student loan cancellation would happen on a single day. So what if you paid off your student loans a month before and you find out now, oh, I could have had it forgiven? What about that? Anyone who paid off the student loans in full before that one day would be excluded from any student loan debt cancellation. And many are wondering whether these former student loan borrowers would receive any tax credits or cash payment. Again, this is in part an economic stimulus. Also, they say that the federal government can't retroactively compensate borrowers who no longer have student loans. However, many of these borrowers sacrifice buying a home, working two jobs, or stop saving for retirement so that they can pay off the loans. Now, this is not to say that those who would qualify for wide-scale student loan forgiveness haven't done the same thing, but it's a question of fairness as to whether any former borrower who recently paid student loans should be reasonably compensated. Now, some other ideas on why it shouldn't be done. The Bloomberg editorial board said in November, no matter how it's designed, student debt forgiveness is very poorly targeted. Even if relief could be better focused on the poor, severe drawbacks remain. For one, the vast majority of Americans who don't have student debt would rightly feel left out, like we said. Many never had the opportunity to get a higher education. Others put off financial goals, such as saving for retirement, to pay it down. Also, it would do little to improve the immediate cash flow of the many debtors who, because they're in default or income-based repayment plans, are making small or no monthly payments. The burden of student debt in America isn't equally shared. That's another concern with debt forgiveness. In 2019, households with graduate degrees owed 56% of education debt, even though only 14% of adults over the age of 25 have graduate degrees, and the 3% of households with doctorates or professional degrees held 20% of all debt. Meanwhile, many of those struggling with most student debt are those who never finished their degrees. And the Mark Goldwine, the senior policy director at the Committee for a Responsible Federal Budget, said, "We found that it's all really poorly targeted stimulus. It would boost the economy, but by our estimates, for every $1 of loan forgiveness, it would boost the economy by somewhere between 8 and 23 cents, which is a very poor multiplier. Basic arithmetic tells you that." Other analysts disagree with that, of course, estimating the multiplier to be at least $1 on every $1, meaning that spending on forgiveness would directly boost the economy. And a 2018 study from the Levi Economics Institute of Bard College projected that the debt cancellation could boost the gross domestic product by tens of billions of dollars a year and reduce unemployment. So you got to balance the debt forgiveness, or the student loan debt forgiveness, with these other factors. Will it really stimulate the economy? And also, bear in mind that since July 1st of 2010, student loans have been funded with public money, taxpayer money. Okay. So if you're paying back a student loan, you're basically paying it forward. You're paying the money back plus interest, which puts money back in the coffers to then be lent out again to new students coming up, along with grants and everything else. So you're providing opportunities for more people when it gets paid back. But what are the implications of this debt being forgiven, being wiped out, and the coffers to a certain extent being emptied? That money does not come back in to be lent out again. And what are the tax implications that we may be facing to refill that fund, to have money coming back in again, because you're paying it forward? So there things need to be done to deal with the student loan crisis. That's why I think income-driven repayment plans are good. Bankruptcy discharge, if you really need it, that's good. But to an extent, because at least with public money, not private student loans are a whole other thing. Other until 2005, they've been dischargeable in bankruptcy anyway, like any other debt. But really, the public loans, the government loans, and like I said, that pay it forward system, this impacts has broader impact in forgiveness. And remember, it's only federal loans. So if you have a lot of private loans, absent a bankruptcy discharge, this stuff isn't going to help you. So no matter all these other things that President Biden talks about, unless you have the opportunity to get a bankruptcy discharge, if you have private student loans, these things he's talking about aren't going to help. So that's why I say that of the six proposals, the ones that are going to help the most people are the better income-driven repayment plans, and bankruptcy discharge. Now, there are also these 5 reasons not to cancel student loans. Cancellation of student loans for everyone excludes 200 plus million people, which we said. It invariably benefits wealthier Americans with graduate degrees. So you have the smaller group of people owing the largest amount of money because they borrowed a lot more. Stimulus checks and unemployment benefits may be better ways to stimulate the economy. So from a stimulus standpoint, these programs for student loans may not be the best solution. Canceling student loans is unfair to borrowers who paid off student loans, as I mentioned, and canceling student loans doesn't address the high cost of education, which is also true. Going forward, this may help now, but going forward, what do we do? We have costs of education going up and up and up. Should the federal government, should the Department of Education be flexing its muscles a little bit and saying, hey, colleges, if you want to qualify, be accredited for federal student aid, clean up your act, sharpen your pencils, keep your costs under better control, stop yanking up the cost of attendance. So people are borrowing more money to go to school. And maybe that's a way the federal government can help out by putting pressure on schools to keep the costs down and get at the root problem. Now, also, President Biden has talked about not only we're dealing historically with the loans and the debt that are created by borrowing, but also for students going forward with free education. He's talking about tuition-free community colleges. He proposes to provide 2 years of free tuition at community colleges and other high-quality training programs for hardworking individuals. It'll be available to part-time and full-time students, non-traditional older students, and dreamers. The federal government will cover 75% of the cost and the states the rest. So this would give maybe an opportunity for older Americans to go back to school and get more training and education for a better job. And then also free tuition at public colleges and universities. Joe Biden proposes to provide up to 4 years of free tuition at public colleges and universities for families with income below $125,000 a year. But again, that now is limiting your choices of colleges to the public schools, and maybe the school that would give you the best training or has the best program in what you want to study is not a public school. And he also wants to double the maximum federal Pell Grant. So that would help because that's some money you don't have to pay back. And the plan would make public colleges and universities free for students from families earning less than $125,000 per year. This aspect of his plan comes from a proposal from Senator Bernie Sanders, known as the College for All Act of 2017. So he's sort of borrowing from that. According to the act, about 80% of the population would qualify for free tuition. But again, this has an economic effect as far as funding through taxation and everything else. Things are not, free isn't necessarily free. So we have to look at the broader economic picture for these things. So that's what I wanted to talk to you about today, of what President Biden is talking about. Keep an eye on things as they develop in the first 100 days of his presidency, see what Congress is able to do to pass some legislation. But what I would be looking at more than anything else is, as I said, can he get through better income-driven repayment plans? And can we get the bankruptcy code amended to let you just get a fresh start, wipe out the student loan debt, and move forward? Also, where he's extending the moratorium on payments of student loans, federal student loans. And what I tell people is we're really in the eye of the hurricane, all right? There's been a calm as far as repayment of student loans due to executive orders and Congress through the CARES Act, et cetera. But eventually that hurricane's going to come back. The eye is going to pass over you. You're going to be in a situation once the pandemic is over, or once these extensions are over, and you're going to be back to owning these student loans. So it's best to start making a plan now. So If you are still looking at student loans, wondering how much this is going to help you, take action now. Take action while you're in the eye of the hurricane. So when that hurricane hits again, you're in much better shape. All right. And it's not going to blow away your finances when the winds and rain come back. So not to labor the metaphor, but take action. Now, if you live in New Jersey, please, you can give my office a call, 856-686-9910. And we can talk about it a little bit, maybe set up an appointment for you for a full analysis of your situation to see what the best solution might be for you, and especially if these solutions get enacted. So that's that. I don't see any questions in the queue. I know I had to switch gears a little bit from what I originally planned. But if you see this video and have questions, please put them in the comments. I'll endeavor to answer them. But with regard to any questions, it's important to bear this in mind. This is informational. Okay, I'm commenting about what's going on with student loans and whether these measures may help you as a sense of general advice. But every situation is different. So please don't go off and do something because watching this video or any answer I may give to a question, it's not legal advice. Okay, I can't stress this enough. Talk to a qualified student loan attorney. If you're here in New Jersey, contact me. If you aren't, contact a student loan lawyer in your state. Have a consultation with them on the best steps to take. So leave your questions in the comments. I'll try to answer them in a general sense as best I can. And if you need something more specific, reach out to me or a qualified student loan attorney. But going forward, and if you're a subscriber to the channel, great, thank you. If you haven't subscribed, push that subscribe button, click there, hit like, and the little bell so you'll get notifications of future episodes. What I hope to do with Lunch with a Lawyer, it won't necessarily be a monthly thing. When I originally had it a couple of years ago, it was monthly on a particular day of the month. But I think that going forward, I'll have these lunches with a lawyer when a topic comes up that's worth discussing, that's worth really diving in a little deeper on. I may have Q&A sessions on particular areas of the law. So if you have any topics that you would like to hear discussed on Lunch with a Lawyer, leave it in the comments. Let me know. And we'll I'll do the best I can to schedule something going forward. So that's it with Lunch with a Lawyer. It's about 10 minutes after 1 Eastern Standard Time, so probably time to get back to work. I know I've got to get back to work. So good luck to you. And I'll see you at the next Lunch with a Lawyer. And we'll leave it at that. Thank you.